So we're recording this in the middle of October of 2024, and something that always comes up this time of calendar year in either September or October is capital gains distributions, specifically from mutual funds. So just as a refresher, when the fund managers of these different mutual funds buy and sell positions under the hood, under the mutual fund wrapper, the gains get passed along to the shareholders, and then they get paid out in what are called capital gains distributions. So a big thing to consider is if you own mutual funds in a brokerage account versus if you own them in a retirement account like a 401k or 457. We'll get into that a little bit more later. But one of the mutual funds that we have noticed has paid out a good capital gain here in 2024. Market's been good. Usually these capital gains happen in good market years. We did see an instance in 2022 of funds losing money, but then also paying out capital gains distribution. That did not make their owners very happy. But here in 2024, the Fidelity OTC Fund, ticker symbol FOCPX, not a buy or sell recommendation, but just one that we've noticed paid out almost a 10% capital gain distribution to its owners here in 2024, Tom.
It's kind of cool to look at someone's account and see, $9 or $10 or $12,000 hitting an account at a seemingly nowhere. It's really nice to see. I am happy to say that the clients that own these kinds of funds, not this particular one, but clients that own these funds in retirement accounts have nothing to fear because there's no taxability until you take money out of your account, out of your retirement account, not necessarily the investment. But as Casey alluded to, it's in the taxable brokerage accounts that you really have some issues that you have to be aware of.
Why is that?
Well, it's an unplanned distribution, meaning it's not at your control. It's not like you decided, I want to sell 10% of this Fidelity fund and take the money. No, the manager made portfolio changes and those capital gains get passed along to you pretty much at their discretion. Now, there are mutual funds that will have very sizable gains that will make distributions sometimes in June at the end of the second quarter, sometimes like now in September, October. And then there's other funds that will just leave it all until the end of the year. So it's an issue. Clients get a 1099.
Right.
They will call us.
That's what I was getting at. What I was getting at. It's more taxable income for you to report on your tax return, which if it's a substantial, couple thousand or more dollars, it could move the needle and mean you're paying more in taxes come early next year.
Yeah.
Especially like you said, it's an unplanned thing where it's not like you were planning on taking out $10K from your brokerage account and paying the gains on that. But, it is I wouldn't say you made money in the investment, which is a good thing. It's a capital gains tax. Gains meaning you made money. The investment is a good thing. It's just a little wrinkle in the planning side of things where, you're going to have potentially more, pay more in taxes because your investments made money.
So let's take this a step further. Suppose you own this Fidelity fund in a taxable brokerage account, and they declare this 10% capital gain distribution. And suppose you're reinvesting the shares, that 10%, or in this case, say you invested $100,000, you get a $10,000 capital gain distribution, you reinvest it, that $10,000 gets added to your cost basis. It's not deducted, it's added to your cost basis. So let's say over a period of time, this happens, say 3 times and they do a $10,000 distribution each time. So you started with $100,000. You had 3 distributions of $10,000 each. You go to sell this in the future, it's worth $200,000. Your cost basis is $130,000, not the 100 that you started with. Big difference. You already paid the tax on that money.
Yeah, it's important to take that into consideration. So an alternative to owning mutual funds in a taxable brokerage account, this is what I really want to drill down on, is to own exchange-traded funds, or ETFs, which we talk about the differences a lot on different videos and podcasts. And the difference, is in the tax efficiency. So ETFs typically don't pay capital gains distributions like mutual funds do. You can get similar market exposure. They both own baskets of stocks. They both are very targeted in the market exposure that you're getting in these investments. So I think the case is pretty clear when it comes to taxable brokerage accounts that ETFs are a much more efficient way to invest.
There are plenty of mutual fund families who, over the course of the last 10 to 15 years, have realized the trend towards exchange-traded funds, ETFs. And so in many cases, they have built an exchange-traded fund that mirrors what the mutual fund owns. And so you get an ETF that's a lot more tax efficient. You don't have the potential tax exposure that you would have with a mutual fund. But there's also usually a difference in the expenses that come with these ETFs compared to the expenses of a mutual fund.
Right. So this stat is from a CNBC article where they talked to an analyst at Morningstar. So over the 5 years from 2019 to 2013, about 70% of U.S. stock mutual funds kicked off capital gains. 70%. That was true for less than 10% of U.S. stock ETFs. So it's just a difference in how they're structured. It's a difference in how they're managed. But I think mutual funds were, they're still in a lot of these retirement plans. They're still on the menu of a lot of 401ks, 457s, 403bs. That's, we're not seeing ETFs infiltrate that space just yet, although some people are calling for that to happen in the future.
Yeah.
Due to things like expenses, like you referenced there. But, like I said earlier, I think if you're owning mutual funds in a taxable brokerage account, I think you can do better from a tax perspective and get just about the same market exposure from doing that in an ETF. And you won't have this surprise of capital gains distribution and potentially paying more in taxes because of that.
Yeah, that's good. It's a really good point. And there's still plenty of folks out there who don't understand what exchange-traded funds are, what ETFs are. They're mutual funds that trade on an exchange. When you invest in a traditional mutual fund, they do not trade on an exchange. And that's why early in my career, people would say, I want to buy 100 shares of this mutual fund. It doesn't work that way. You have to tell us like the dollar amount that you want to invest, because I can't even tell you today what the price is going to be, because you're going to get the price after the market closes.
Right. It's the mutual funds update in price only once per day, whereas ETFs are updated continuously
while the
throughout
market's
the day.
open. Yeah,
Yep.
That's why it's exchange traded.
Exactly. So there's that price discovery element as well, which is another benefit towards ETFs there. Like I said earlier, in 2022, the market was down, but because the market was up in 2020 and 2021, these mutual fund managers peeled off some of those gains. So the price of some of the mutual funds was down. You lost money in the investments, and then you got hit with a tax bill on top of that. So at least here in 2023 and now in 2024, we're seeing gains happening because, the stock market has been good so far this year. And that's why we're seeing these gains happens. So if you own mutual funds in a taxable brokerage account, you should probably anticipate a 1099 at some point in the next couple of weeks or before the end of the year here. Make sure to get that over to your tax preparer, as they will need that information.
I was going to get into the whole idea about, when you have a down year like 2022, the funds usually get a lot of calls for redemptions, and so they're kind of forced into selling shares of, whether it's bonds or stocks. They're kind of forced into selling the most liquid asset that's there, and unfortunately, that's usually something that's got a nice gain to it. And so that's a big reason why you'll see a year like 2022, you'll have a loss in the value of the fund, but you'll also get a 1099 for a capital gain distribution. And it's lousy because you lost money and you have a tax bill that comes with it.
Yeah.
So,
All right.
I think that's it.
I think that's going to do it.
All right. Hey, was I supposed to hit this record button? Just kidding.